Welcome back, guys. Tonight I hope you had a really great day trading today, and I hope that you were able to catch the first video that I posted earlier today. It was a recap of today's price action, and I'm starting to get those out earlier in the day, and then the later video is going to be the trading range for the next day. So here we are. We do have some earnings. We have AMD, Microsoft, and Starbucks. Those are all in after hours tomorrow. Then Wednesday, we have Boeing in pre-market, Meta in after hours, and Wednesday we also have FOMC. The rate decision is at 2 p.m. and Jerome Powell speaks at 2:30. So when we start getting into the trading ranges and we see this really wide Wednesday, that is because we have big earnings and also the FOMC rate decision. So big stuff coming up in tomorrow and Wednesday's trading range. I'm going to slide my intro right here, and then let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to visualize the next day a little bit easier and you love that I break it down every night, then please make sure to give this video a like, and don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Also, if you have any questions, this is complicated stuff, please don't hesitate to ask, and don't forget about that thank you button. It's an easy way to show your appreciation, and it helps me to keep bringing you guys unbiased content day after day. Alright, so today I'm going to do the regular lineup, and then at the very end of the video, I'm also going to do AMD, Microsoft, and Starbucks expected moves for earnings. So make sure you stay all the way to the end for that. So starting in SPY, tomorrow's implied move is between 540 and 549, and that is from options. And the 30-day average volatility is a little bit wider in each direction, 539 to 551. And then if you're playing earnings, either AMD, Microsoft, or Starbucks, and you're trading SPY, you're going to be looking to Wednesday's contract. That is between 537 and 552. And to the upside, the first level we have is going to be that 35 EMA. This 35 EMA has been completely flat the past few days. It's completely flattened out as we consolidate on that 50-day moving average. And we have huge economic data and big earnings coming up. So this is going to choose a direction, and it's probably going to choose one tomorrow or Wednesday. So keep an eye on this 35 EMA, and if it starts turning up, then look up. And if it starts moving down, look down. And right now we have futures down 0.1%. So that's going to take us to right between the 50-day moving average and the 35 EMA. So this 35 EMA is likely going to be to the upside in the morning. And then if we get above that level, then the next resistance is this one right here that we did see today twice, and then last Friday and last Thursday. So that is at 546.83. Let's make that 547. And if we get above that level, then tomorrow's top of the implied move is at 549. And you could see that that is the bottom of this island top gap right here. And that is this gap right here from last week where we opened the week, and then Wednesday we gapped down. Those two gaps are right here at the top of the implied move, and we also have the 1 hour 200 moving average, and then above all of it the 30-minute 200 moving average. So a huge wall of resistance at the top of the implied move. So 549 top of the implied move, and 552 is the top of the implied move on Wednesday's contract. To the downside, the 50-day moving average, which we are trying very hard to stay above. If we do break this level in the next 2 days, that is a big deal. And then for tomorrow, the bottom of the implied move is 540. Bottom of the implied move on Wednesday's contract, 537. And we do have this up gap. This is from last week, Thursday going into Friday. So far, we have started the week above that gap completely. It is underneath the 50-day moving average, and then at the very bottom of the implied move on Wednesday's contract, we do have the gap from June CPI, FOMC, PPI. So this is the gap right before, I believe we saw CPI first, and then we saw PPI right here. And that's pretty interesting that on Wednesday, we do have FOMC again. So we're back to where we were trading back in June before FOMC. And the bottom of that gap is at 536.91, so basically 537. Absolutely crazy trading range tomorrow. If you're new to trading, this is definitely, I'd say, maybe an intermediate to an advanced trading range. So definitely, if you're up, take profits. Nothing wrong with being on the sidelines for this unless you're just a complete adrenaline junkie. So that is SPY. And taking it over to QQQ, the implied move over here is between 5 and 470, and that is from options. And the 30-day average volatility is quite a bit wider here, $4 in each direction, 454 to 474. And then on Wednesday's contract, we have a really wide range, almost $10 in each direction, and that is between 454 and 474. So that lines up completely with the 30-day average volatility. And to the upside, we have that 35 EMA. It has pretty much flattened out, so it's coming right across the center of the implied move for tomorrow. And we have been having trouble getting above that level. You could see here today, we did see that as resistance. And then before that, the last time we tried to get above it, we spent about 2 days trying to get above that level, and then we gapped down. And then even before that, we saw back here, we spent about 2 days trying to get above the 35 EMA, and then we gapped down. So that has been the pattern. That's not what has to happen tomorrow, but that is and has been the pattern. So the 35 EMA, definitely the first level to look for. If we get above that, then we have been seeing resistance right here. We saw it today and last Thursday, and that is around 467. And then if we get above that level, 470 is the top of the implied move, and 474 is the top of the implied move on Wednesday's contract. And once we get to that level, 474 was a previous support right here that has turned into a resistance. So right here as well, we saw 474. And then above that, we do have this island top, which is this up gap right here from last Monday, and then the down gap here from last Wednesday. And then in that gap, we have the 50-day moving average, and the 30-minute 200 moving average is coming in from the top. So some serious resistance just outside of our trading ranges for the next 2 days. So if we do see a pop up to this level, might not be a bad idea to take some profits around here. And then to the downside, we do have this gap from last Friday that basically lines up right with the bottom of the implied move at 458. This was where we closed on Thursday and we gapped up on Friday. And then just underneath the implied move for tomorrow, we do have the 4-hour 200 moving average. And then right at the bottom of the implied move for Wednesday at 454, we have the rest of this island bottom gap right here. And that goes back to right here where we saw a down gap and we dropped. That was in the last week of May. And then when we came back up, we gapped over that down gap, creating an island bottom. And we did so far last Thursday, we closed out just the bear gap part of it. So that makes me think that if we do come down to the 4-hour 200 moving average, we may see a technical bounce, as we might see some buying down at this level. So another really wild trading range, that was QQQ, and switching it over to SPX. The implied move over here is between 54.20 and 55.05, and that is from options. And the 30-day average volatility is quite a bit wider over here, 54.05 to 55.20, and then on Wednesday's contract, 53.95 to 55.35. So we have an implied move on Wednesday's contract that is wider than the 30-day average volatility. So the market is definitely anticipating some big moves. And to the upside, the first level to look for, 35 EMA. Basically, that level has flattened out completely right now. It is waiting for direction. So keep an eye on that level. That is going to be the first place to look for direction. And if we get right above that, then we do have this resistance right here. We saw that today, Friday and Thursday of last week, and that is at 54.85. Top of the implied move for tomorrow is 55.05, and on Wednesday's contract, 55.35. And then at the top of the implied move, we do have this island top. That is last Monday's up gap and last Wednesday's down gap. And those island gaps tend to be a battle zone. And this definitely looks like a battle zone with that 1 hour 200 moving average and the 30-minute 200 moving average all in that gap. And then to the downside, we have that 50-day moving average. We are trying pretty hard to defend that level here before big earnings and FOMC. And you could see last Thursday we dropped underneath it, saw some buying in this gap. Then we got pulled back up and dropped back underneath. And then Friday and today, we have been seeing that as support. Of course, earnings and FOMC are going to play a big role in whether we hold this level. But for right now, we are seeing a little bit of support. If we do drop underneath that, the bottom of the implied move is 54.20, and on Wednesday's contract, it's 53.95. And then we have the rest of that inflation data and FOMC gap right here. That's at 53.75, and that does go back here to June, and we did close about half of it right now, and that is about the middle of June right here. So that is SPX. Let me see if I see anything else. Definitely the main thing that sticks out is this 50-day moving average that is just slicing right through the trading range. So keep an eye on that. And then let's take it over to IWM. So the implied move for IWM is between 218 and 225, and that is from options. Let me get this moved just a little bit. And the 30-day average volatility is $2 wider in each direction, 216 to 227, and that also lines up with Wednesday's contract. So 216 to 227 for Wednesday. And to the upside, the first level is going to be that 35 EMA. We did lose that level today, but we did fill this gap right here, and we did leave a little bit open. So we lost the 35 EMA, even though we did find a little bit of support underneath there. But that's going to be the first level to look for. And then above that, the top of the implied move is at 225, and that lines up right with resistance today right here. So right around 225 is where we did see last Friday resistance, and then today again at open. And then on Wednesday's contract, we do have 227, which does line up right with the bottom of that bear gap, and also where we did see that resistance 2 weeks ago. So that bear gap is right there. That goes back to 2021 before we saw that big drawdown of 2022. So let me zoom back out right here. It is right here, but let me fix the chart. You can see that gap right here. It did happen in the middle of the week, so if you do go back on the daily time frame, you will see a gap right here in the week of November 22nd. So definitely know that we do have a bear gap just outside of tomorrow's trading range, and bear gaps to the upside are always a great place to take profits. So that is the upside. To the downside, we do have this gap from last Thursday going into Friday right here, and we filled most of that today, but we do have a little bit open, and that is, I'm gonna zoom in right here, that bottom of that gap is at 220.44. So I'm going to call that 220, and then if we do break that, then we have 218 as the bottom of the implied move tomorrow, with that 30-minute 200 moving average just underneath us. And then the bottom of the implied move on Wednesday's contract is 216. So for FOMC, that is what options is saying as of right now that the bottom of the implied move is. So let me zoom out just a little bit, see if I see anything else. So we do have a little bit of a support right here. That goes back to last Monday. That's where we opened up the week, and that is at 215.85. So that also lines up with the 216 that we have for Wednesday. So really interesting trading range in IWM. Momentum here at the moment is down, but we all know that anything can happen for FOMC. So that is IWM, and then DIA. So DIA is the chart that always looks a little bit different, and that is because we only have weekly options over here. And so the implied move, I do take that reading over the weekend, and 398 to 413 is the implied move on the week. And then for the daily range, we use the 30-day average volatility, and that is between 401 and 411. And we did see a roll over here in Stupid Willie, and it is pointing right to the 35 EMA. And we did see a bounce on that level today, and then a rejection in our indicator. So we are looking at the 35 EMA as the first level to look for. It is to the downside. If we do see a bounce there, then the next level above that is going to be where we saw resistance today, and that is at 407.62, and around that however you need to. And then above that, the top of the trading range for tomorrow is 411, so that 35 EMA is to the downside. And we also have the 30-minute 200 moving average going right through our trading range, and we did see a catch at that level. It was definitely a bit sloppy towards the end of last week after that pullback, but it did catch us. So for right now, 30-minute 200 moving average is a support level, and then underneath that we do have the up gap from last Thursday going into Friday, and the bottom of that gap is right here at 400, and the top of that gap is basically right at the bottom of our trading range for tomorrow. So there you have it, guys. That is the indices. Now I'm going to switch over to do earnings, and let's start with AMD. So for earnings, let's take this to the 1-day candle here, and this is the implied move here for AMD for tomorrow. We are looking at a $12.70 move in each direction, and chips have taken a big hit lately. So the implied move for tomorrow is between 127 and 152 for earnings, and that is from options. And what to look for is going to be, if we pop up here, the 35 EMA is still above the 30-minute 200 moving average, but it is pointing down and projected outward. It does look like we may see a bearish cross down here. But if we do see this as support here, then we may see higher. But this is for tomorrow for earnings. And just looking back a little bit further, the last time the 35 EMA came down like that, you could see right here we are underneath the 30-minute 200 moving average, just like we are right here. And that 35 EMA did find support right there, and then we took it for another leg higher. So definitely keep an eye on that 35 EMA, because if it does cross down, as it does like something right here, that's when we start seeing those bigger moves down. So maybe I'm taking that a little bit too far into the future, but that's okay. So tomorrow's implied move for AMD is between 127 and 152. And then switching it over to Microsoft, the implied move over here is between 404 and 450. And that is a almost $23 move in each direction, so 5%. And you could see that we are underneath the 35 EMA right here, so let's just extend that out. And we do also have that red momentum right here, and then the 1-day 200 moving average is underneath us. So if we zoom out just a little bit, we can see that we haven't seen that level for a really long time. And I just wanted to point out that I think we're right at the bottom of this channel. Yep, right at the bottom. So we have right here, here, and here. And you can also see that we saw that bounce up right here. So that is the trading range for tomorrow. Sorry, not the trading range. That is the expected move for earnings for Microsoft and then StarBucks. The implied move for StarBucks today, we have... not today, for tomorrow's expected move for earnings is between 69 and 81, and that is a 8% move, $6 in each direction. And Starbucks has taken a massive hit lately, and that is, let me just zoom out just a little bit. Wow, look at that. So let's look at that on the weekly time frame. So we are sitting near a support level for Starbucks, so that's really interesting. And on the weekly time frame, we are extremely oversold, and this almost looks like a bullish divergence. Let me see that in RSI. Yeah, you could see a bullish divergence right here in RSI. So if you are thinking about trading Starbucks, in my opinion, it looks like it could be ready for a move higher. But don't trade my opinion, trade the chart. And you guys have fun tomorrow, trade safe, make sure you take profits when you're up.